And welcome back, everyone, to another RLT Pivot podcast. My name is Tracy, and I'm once again joined with my amazing co-host, Mr. Dan Jensen. How are you, sir?
Doing great. Good to be back on another episode of the Pivot podcast. Appreciate you filling in last week as it was a holiday here in the U.S., but you killed it. Appreciate that, and awesome guests as well. So this episode, though, we have a couple things on the agenda that we want to get to. Number one is we do have our contest that wrapped up, so we appreciate all these submissions that came in for the contest, and that was the contest was as far as sending us some of the back trades that you've done, go through 3 months of history in the stock market via TradingView or however you back trade, submit those trades to us, and basically write down those numbers, and we'll definitely get into why that was important, why that exercise was important as far as personal growth, building out your trading plan, and really starting to get more and more comfortable with the stock market. So do you want to do the winner now? Or should we announce a winner?
Yeah, absolutely. I think you should pull out your little wheel and give it a roll and see who shows up.
We got the wheel of, I guess not Wheel of Doom, but we got the spinning wheel. We have all the names from submissions. So let's give it a quick spin now.
I can hear it. That's awesome.
You can hear it.
Yeah, the Wheel of Fortune.
All right, looks like we have our winner. So congratulations to Brittany R. for your submissions. So what we'll do is we'll send you, if you're listening to this now, we'll shoot you an email. We'll get a 30-minute coaching session with myself and Tracy for you. But congratulations and good job on submitting the monthly competition task, which is awesome.
That's awesome. So now I guess the important thing is once you've done all of this, we're going to step into the next stage. So today, I think what we'll do is we'll talk about benchmarks and what are they? So Dan, what are benchmarks?
Yeah, absolutely. So gathering the data is one thing, right? So having the numbers, extremely important. But any good accountant could have a whole bunch of numbers and be horrible at their job, right? So if you don't do anything, it's the same thing. You go to school, you take a whole bunch of notes, but you don't ever look at those notes. They're irrelevant and completely useless. So by being able to analyze the data and to know what you're looking for, that's going to help you create benchmarks as far as how well your strategy works in the current market condition or in a certain type of market condition. It also allows you to get a full sense as far as who you are as a trader and to know kind of your rhythm as how many wins you have in a row, how many losses you typically have in a row. And this way, once you have those numbers written down, you can see if the current trading plan that you have is working in current trading environments, or if you have to switch it to maybe another back-tested strategy based on maybe it's more bearish market than a bullish market, or the market is trading sideways. And that's going to help allow you to really understand what to take, why to take it, and really also give you the confidence when you're actually hitting the button to buy or sell something.
Excellent. So what are some of your favorite statistics or, I guess, analytics that you keep track of in your journal?
So I keep track of a few. I have a few different trading strategies that I'll use, and I'm looking for really candle patterns. I'm looking for volume on certain trades. But for me to go back, the number one thing is what is the win-loss ratio? I think that's one of the most, for me at least, one of the most important things to keep track of, because I know every time I see this certain pattern, you want to leave emotions at the door. You want to leave that out of your trading day-to-day habits, and you want to be as much of a robot as humanly possible. You want trading to almost be boring, because if you're doing that over and over again, you see that setup, you see what you go, great, I have a 62% win ratio anytime I see this certain setup, right? And if you know, even if it's a 51-49, yeah, any trade that you take might not work, but just seeing it over and over again by putting it on repeat and being able to execute those trades, you have a full understanding as to where in the long term that trading style is going to land you on a trading basis without having any emotions or changing maybe what you were doing when you were back trading. So for me, the win-loss ratio would be most important thing to know if this is even a successful trade. If I'm back trading and I'm looking at a 39% win ratio, that's probably not either a trade I want to take, or I got to go deeper into those numbers and figure out why am I not having a good success rate with that certain strategy. Maybe it's stops are too tight. Maybe I'm being too aggressive, or maybe I'm taking money too quickly off the table as far as the wins go, and I'm letting the losers ride. So all of that has to be kind of looked at a little deeper. What would you say for the benchmark for yourself that you would personally be tracking?
Well, definitely the win ratio, but I do want to address that a little bit more, because the win ratio needs to be in conjunction with your average gain and your average loss. Because if you are trading, say, a low win rate, so let's say 39%, but your average gain is, say, 4R on that average gain, then that's a little bit different than, say, a strategy that yields 39%, but your average gain is only half an R. There's some numbers that need to be manipulated. And as you pointed out, yeah, you may not want to take that strategy if it's only a 39% win rate, but you have to consider what the gains are on that strategy. It might be a low success one, but you have really small losses and really huge gains. And if you know that, you can set your mind in the right perspective to be able to handle the consecutive losses that you're going to get with that low probability setup. But you know that if you continue with your plan, you're going to get these big hitters, and that's to be expected. So it's really about taking those numbers and then using them to adjust your own expectations accordingly. So I do like the win rate, but I also need to make sure that I understand what my average loss is, what my average gain is. But I also consider my average gain or my average loss in a month. So hopefully it's an average gain and you're making money every single month. So that's what I like to know. And those are probably the key ones that I really pay attention to. There are other ones that I look at as well, but those are the key ones that set my expectation month after month, day after day. And that's a big one for me. I think the numbers are probably the biggest reason for my ability to control my emotions.
Yep.
Right?
Yeah, well, once you have that proven track record, which would be the numbers, and again, in today's day and age, with technology, with the different software that's out there, and I personally use TradingView, so that's why I'll keep using it. But there's other ways to back trade and things like that. For me personally, it's TradingView. By being able to sit down when either the market's closed or you have some free moments or on a weekend and be able to build that data behind you. One of the biggest things that I get as far as when I'm coaching or when I'm in a mentor group is, how do you know when to let a trade run longer? How do you know when to move stops? It comes down to back trading. It comes down to those numbers. And there are certain strategies that you should use. Like if you're taking a momentum strategy, you should be typically, we have the, and Jeremy back traded, but we have the 10 EMA strategy. You're looking for typically a 1.2, 1.4, but okay, I'm not going to let this thing ride as much just based on the history that I've been trading it, and having the data points behind you to say it's a higher win ratio, but I know I have to take less. Or if you have a different trading style, all right, maybe it's a little bit less of a win ratio, but maybe I should be taking partials, or I should be able to let this thing run, and I know I have to sit through some pullbacks, things like that. But that's where all those that's using the data to be able to develop kind of your style when the market's live.
Absolutely. It really comes down to adjusting expectations accordingly, and having those numbers is what's going to do it. So, how do you keep track of all this with every trade, or do you go back month after month to figure it all out?
Yeah. So I mean, I'm at this point in the career. I'm still back trading a decent amount, especially when I'm learning a new strategy. There's always something new to learn in the market. So if I see something or someone is like, "Hey, this is what I've been doing, and it works for me," I'm not going to just blindly just jump in, and because that just changes my entire business model, which is what I'll call it. But for me, I want to now say, okay, well, is there something that I could now take from that strategy? Either just follow it perfectly to what the rules are to that, but I want to make sure that that works for me, and it's just not based on somebody took 15 trades and they just so happen to be great, but on a longer term basis of 100 trades, it's actually not a great strategy. Or maybe there's something in there I could take and just be able to improve on some of my strategies. So I'll still back trade. I'll still take the numbers down as if they're real trades and have an Excel spreadsheet for that. And then because I've been trading a decent enough time now in the market, I also have all my live trades, all the same data that I'm writing for the live. So I can also see, which I think is important as people get more and more comfortable trading, if you're trading a certain strategy and you have a certain win ratio, certain R's that you're making back trading, and now you're in the market live and you're doing the same type setup, same strategy back trading, but your numbers are not working, a lot of times that you could almost pinpoint it to, I'm probably doing something emotionally where I'm tying my thought process to and my emotions to the actual dollar value as opposed to just the charts and just basing all my entries, stops, things off the actual bars of what is coming out live on the trades. So I think it's a good way to decipher, but I will keep track of all the information on both.
Absolutely. That's 100% correct. And that's one of the reasons that I use my statistics or my benchmarks is first, it's to set my expectations accordingly. And then it's to gauge my performance against that benchmark month after month. So I'm either meeting or beating, or if I'm not meeting or beating, what's wrong? How far am I missing? And I do have, because there's going to be an expectation. I mean, when you're collecting these benchmarks, you're going to be looking for what's the lowest gain you might have in a month, or what's the highest gain you have in a month. So you get a range. It's not a specific number. You will get an average over the year that you'll get month over month, but you will, if you log what your lowest and your highest is, you have kind of a range. So the minute you start expanding past those limits, that's where you need to take a look at what you're doing, just like you mentioned. So it's absolutely crucial, I think, for success for you as a trader to be able to grow and figure out and even troubleshoot what you're doing right, what you're doing wrong, and move on from there. So that's absolutely a great point.
And I think everybody, again, it comes down to knowing and doing is two different things. I think everybody knows now that they have the numbers in place, being able to go through it, trying to decipher what works for them, what doesn't, what their actual numbers are. Is there a way to use a benchmark incorrectly?
Good question. Is there a way to use the benchmark incorrectly? Yeah, I guess so. There would be, for instance, if you start, let's say that you have an average gain of 1.5 Rs and you have an average loss of a half an R. If you start to see your trades get to a half an R loss and you immediately exit because you hit that half R benchmark and you're thinking, I don't want to lose more than that. Or if you, let's say you hit an hour and a half gain and then you start taking all your profits at that instead of recognizing that, okay, well, you're changing up the plan at this point. You're starting to allow fear to get in. You're allowing fear to adjust your trading plan, and that's never a good thing. So you've created another variable that you didn't trade or you didn't practice in your back trading that is now going to affect your outcomes, because in order for that 1.5 gain to be logged as an average gain, you have to have some that might be 2 or 3 or 4 R winners. That might be the case. Or same with your average losses. There's going to be times where you're going to have more than a half R loss, but because you have a lot of small losses following your plan, it averages out. So taking those and then readjusting them, saying, okay, well, as soon as it gets to here, I'm just going to exit. You're funking with the numbers. So it's becoming, it's no longer reliable. You can't use it because the minute you do that, you've changed all the dynamics.
Yeah.
What do you think?
I would also say too, by having a benchmark, it's break it down into the numbers that make the most sense. And when I say that, it's like, I guess, break it down to as much detail as possible. Mm-hmm. I would also gather, because if you're back trading, typically you're going through data relatively quickly on the back trades, going candle to candle. But what you don't really see in the back trading is what your third trade of the day looks like. So back trading, it's easy because you're saying, okay, there's my setup. I hit the button. I want to take it. A lot of times, though, your first trade of the day, either there's that little extra motion because the market just opened and you're excited to get in, excited to do something. But if that trade doesn't work, what are the numbers for your? And I think that's it. Again, back trading, it's hard to decipher that. But once you have a history of the real numbers, you can say like that second trade. A lot of times, what people do is, I just don't want to really lose on that second trade, right? I don't want to lose 2 hours for the day and be done if that's your plan.
Mm-hmm.
So what they'll end up doing is the second trade might be the same perfect setup that they have back traded and works. They have a good win ratio. But on that second trade, they're so now more fearful of losing the second trade or just trying to lock that profit, where almost a lot of times the second trade is night and day compared to that first one. Mm-hmm. So I think it's important to kind of say, how many trades am I taking in a day? And then almost have, let's say it's 3 trades a day is your average. Have 3 sets of data based off of, and it is a little bit more work. I'm sure you could set up Excel spreadsheets to kind of just manage those numbers. But see if there's a difference as far as my first trade, thinking with a little more clear head, or my second trade, either coming off of, hey, I just won a decent amount of money and now I just want to aggressively go in, and you feel like you have more to give back to the market in case something goes wrong. Or if you lose that first trade, how aggressive are you getting on that second trade typically? Because that will change your numbers, and then you kind of go back again to your benchmark from when you were back trading and say, well, my second and third trade, they typically don't match up with the numbers from overall back trading. And you can kind of work on correcting some of that and understanding that you're probably adding a little bit more of that emotion to the second and third trade, the follow-up trades, than when you were starting the day with a clean slate.
That's a great point. Now
that could come into it. Yep.
Yeah, for sure. That's a great point. I in my journal, so I've added more. I have a ton of metrics that I measure, and I use the same journal for back trading that I use for day trading. In fact, I've tried to give my journal to people, but it's too complicated. So it's whatever. It's built for me. I like it. I use it. I know how to use it, and it's going to stay that way. I keep track of, and I actually have a column in my journal that shows me what my gain is throughout the day, gain or loss. So after each trade, I'm either up or down, and then at the end of the day, it's colored differently so I can identify where the end of each trading day is, and I know where I bench out. I keep track of the setup that I do. I keep track of the day and the trade that I like, what trade it is, whether it's the first trade, second trade, third trade. I also keep track of whether I traded in the morning or the afternoon. I break those metrics down as well. And I have a little section at the top of my journal that breaks all of those metrics down and gives me a percentage. So this is the success. This is the P&L that it gained or lost. This is the percentage that it gained or lost. I have all those statistics there. Now, what that allows me to do is say, is it worth me continuing to trade in the afternoon? Is it worth me taking the third trade of the day? Is it worth taking the fourth trade of the day? Is it worth taking the second trade of the day? All of these metrics will be in place. Now, keep in mind that my second, third, fourth trade or my afternoon trades are always going to have lower metrics than my first trade, because there's a lot of times where I'll get into a trade, it's in the morning, it's the first trade of the day, and it'll be one that I sit in for the entire day. There is no opportunity to take another second or third or fourth trade. So the metrics are going to be less. But if those metrics are gaining me throughout the year, I have to look at what are the gains, and are they worth the time commitment to sit in front of the computer? Are they worth the stress to sit in front of the computer? And are they worth the actual risk to sit in front of the computer and actually take the trade? Or am I satisfied with just taking the first trade of the day that I take and then letting it go, however, win or loss, however it goes, right?
Yep. Yeah, and I think I'm glad you brought up the time aspect of things. If you're going through your trades, again, I mean, if you're writing, and I do, for me, in my journal, I write down the time of day I'm taking the trades as well, because not that I need like 9:35 a.m. the exact minute, but but I want to know the general time frame. Was it in the first 2 hours of the day? Is this an afternoon type setup or reversal type play or something like that? That criteria is important when breaking down numbers, because you could have a certain trade that, again, you have a high win ratio, but at certain times of the day, it might not work as well. There might be more momentum built into that strategy that you're using. And maybe during the lunchtime hour, it's not great, but the last hour of the day, it's back on track, and you see higher win ratios. Having that is important as well, just because now you know, okay, I'm gonna maybe, like you said, if the numbers aren't panning out where you're not making nearly as much money, or you're kind of flat for the afternoon, all right, well, why trade the break even, right? So even if you see a great setup, you might think twice. You might want to just pass. You might go out and just turn the computer off, enjoy the rest of your day, because you know where your real money is coming from, right? And again, every strategy is going to work different. You're a type of trader that's looking for your entries, probably based on the gap or where it's opening or sentiment behind it, and you're really looking to play that, as opposed to just watching candles and playing, oh, there's a red, there's a green, there's a red. I need to be in and out of something 150 times, right? But some people, maybe they're more leaning towards scalping or something like that. But you have to know kind of those numbers, what kind of trader that you are. And I think time of the day does play a big key factor into a lot of that as well.
100%. 100%. Now, the other thing that I keep track of is my consecutive wins and my consecutive losses. Now, I think this gets overlooked a lot of times when we're back trading. And the reason being is when we're back trading, it's very easy to say back trade 6 days in a day, or let's say even doing a month worth of back trading in, a few hours of your back trading session, and log those trades. It's very quick when you're back trading to get the results and to get through a lot of data. When you trade in reality, though, you trade, lose, you might have to wait a day, possibly the weekend, until the next trade gets placed, and that one might end up being a loser, and then you got to wait another day, and that one might end up being a loser, and you wait another day, and then boom, you get a winner. And then you go again, and you've got these consecutive days in a row, and that time frame from the first loss to the third loss could feel like an eternity to you, versus when you're back trading. And one of the biggest problems that you'll run into is that feeling, that time that has passed, that eternity that feels like, oh, I'm on a losing streak. It's natural for it to make you feel like you need to start adjusting your trading, adjusting your setups, start making some tweaks, doing something different. And the fact of the matter is, if you actually go back to your back trading session and calculate how many consecutive wins did I have? How many consecutive losses did I have? Oh, wow, this trading session, I actually lost 7 times in a row trading this trading strategy. So what am I panicking about? Why am I getting all upset about 3 losses in a row? It's because I'm not familiar with the time. I didn't know this. Now I do. Now I can relax, because I know that if I continue trading with my trading strategy, it's going to yield me 20 hours in the month. So those benchmarks are really, really important. I keep track of that, and I keep track of it on my current journal. And that way I know, okay, I'm approaching that level of, say, 6 losses in a row, and that's maybe the benchmark I have for this particular strategy. Okay, well, I've also gone back traded my strategy and said, okay, when I start to hit outside of my benchmarks, what's happening? Has the market changed a little bit? Is there a different setup that I should be using? There is. Okay, so now here I've got a loss, and it's gone beyond my benchmark that I understand. The market's changed. This is what I do now. I don't trade this trading plan anymore. I have to, or not this trading plan, this setup. I can't use this setup right now because the market has changed or something's changed. I need to use this strategy right now until certain other metrics are met, and then I can switch back. You can start using those numbers to help you maneuver what the market's doing and the conditions based on some of those parameters. So yeah, I think that's another really valuable metric.
I agree. I think that's well said. But a lot of, and each person that's listening to this Pivot podcast right now, the numbers are going to mean something different to everybody. right? It depends on specifically what you're looking for, but the key factors are what is your win rate on trades, how much you're winning per trade, and then also what style trades give you different win ratios, because you'll have your overall and each breakdown per style, and also I think time comes in. But all of this information is not something that I think a lot of people will cover or go over. If you take any online education class and in person, whoever's teaching you, they're teaching you setups, they're teaching you how to read charts, they're teaching you all that, but they're not giving you the confidence on those trades unless you've been doing it for years and years and years. And even that, the only reason you have that confidence is because you've been doing it for years and years. So if you're just starting out, you back trade, make sure that you have those numbers, make sure that you can dive deep into it, which actually brings us into our competition that we are putting out as well for this next competition. So we have Brittany R won the first one. We'll hit you up as far as email. Do you want to go through the new competition for anybody that's still getting into it?
Yeah, absolutely. So for this competition, what we'd like you to do is know your numbers. So know what your benchmarks are. We want you to identify what your average win rate is, or what your winning percentage is, win percentage, what your average gain is, your average loss in a day, in a trade, your average monthly gain or loss, and then also your I'd like you to add in your consecutive number of losses and consecutive number of wins. So log all of those things and then submit it to Dan at reallifetrading.com or Tracy at reallifetrading.com. And you have until the end of July to do all of this. And then again, the winner will get a 30-minute coaching session with Dan and myself. Now, I did want to mention one other thing, and that has to do with, because I talked a little bit about your consecutive losses, but what about your consecutive wins? How does that help you? Now, knowing what your consecutive wins are, let's say that you back test a strategy, or back trade a strategy, I should say, and the average number of consecutive wins you get is, say, 2, and then you have a loss, and then you get 2 wins, and then you have 3 losses, and then 2 wins, but the most you ever get is 2. And now you're trading for real, and you get winner, winner, and then you get a loss and a loss. Again, having that expectation in place that, okay, well, I've had 2 wins in a row, so there's a good chance I'm going to have a loser. That can set you up to be prepared for that instead of getting upset or going, oh, I need to win every day or whatever. It again sets your expectations, and that's what this is all about. The benchmarks is all about getting your expectations in the right place and having a place for you to start and compare to. So just keep that in mind as well.
Yep. Trading is not, I have to win on every trade. Trading is, I want to be profitable and make money on the longer term, right? And all those numbers will definitely play into it. But I think that wraps up pretty much all the time that we have. We look forward to, obviously, all the submissions coming in the next few weeks. And congratulations one more time to Brittany R on winning that previous competition that we had. Make sure you guys, in the links below, be able to, you guys can check out Real Life Trading, see all the free information, all the free online classes that we offer. And if you missed any of the other previous podcasts, you can definitely go back, click the links, check those out. Tracy, always a pleasure hosting the Pivot Podcast with you. And thank you guys all for listening. We'll catch you guys on the next one.
One more thing before we go. I would like to say that if you are new to the show and you are just starting out listening to the show, feel free to submit any of the contest parts. You won't win the actual 30-minute coaching session for each contest, but what you will get is your name entered into the end of the year draw for the 2-hour coaching session. So feel free that if you're just starting with the show and you're just getting caught up, please submit any of the contest submissions to Dan or myself at reallifetrading.com, and your name will be entered in for the final draw at the end of the year. Have a good one, guys.